The IT and IT services exports is perhaps the biggest industry in India. It is also by a long distance the largest export industry from India. While the industry has seen rapid and consistent growth and robust margins over the last several decades, the recent trends have been somewhat subdued. The total export revenue for the year is expected to be around $199 billion in FY24 as against $194 billion, a growth of 3.3% in constant currency. This is less than one third of the 11.4% achieved last year and is perhaps the lowest in the last decade or more. The margins for most of the companies have also been in a declining trend. In this short video, we will look at the key trends and the current state for this key industry. In this video, we will largely focus on the top 5 or 6 listed companies. Now let's discuss about the headcount. This may also be the first year when the overall headcount of the industry has been on a decline. The industry may have seen a net addition of 60,000 employees in the current year. Most of the addition has been in GCCs. GCC or Global Capacity Centers are company-owned dedicated centers. For example, when IBM or American Express sets up a development and support center in India. Last year, GCCs added 280,000 employees. While exact figures for the industry are not available, most large third-party service providers have reported a decline in the headcount. Many of the companies are reportedly not doing campus recruitments this year or have several curtailed their campus recruitments. The trailing 12-month revenue for TCS is about 6.27% higher than FY23. Similarly, Infosys TTM revenue is only 4.3% higher. This is much lower than around 15% or so that the industry has grown consistently over the years. For companies like WIPRO and Mahindra, there is zero or negative growth so far. The margins are also similar to last year margins. This is not likely to change dramatically in quarter 4. These margins are the lowest in the last 5 years. The larger IT companies aim to receive large multi-year contracts which may be in business transformation, consulting and other long tenure projects. In the FY24 quarter, HCL Technologies demonstrated continued excellence in deal making, recording a substantial increase in large deal wins, with 18 deals inked and quarter 3 bookings soaring to $1.92 billion, resulting in a remarkable 10% year-over-year growth in year-to-date bookings reaching $7.5 billion. WIPRO's performance was equally commendable, with the company booking an impressive $3.8 billion in deals during the third quarter, while its year-to-date bookings exhibited a remarkable 20% year-over-year growth. In the most recent quarter, quarter 3 FY24, WIPRO reported a total booking of $4.3 billion, marking a 26% year-over-year increase, with large deal bookings rising by 69% year-over-year. This growth in large deal bookings was notably stronger than the 24% growth reported for the previous quarter. Infosys also exhibited strong deal-making capacities, boasting its highest ever large deal value of $13.2 billion for the first 9 months of the fiscal year, particularly excelling in securing large multi-year contracts in business transformation and consulting. TCS has emphasized organic talent development, fresher hiring from campuses, and recalibrated lateral hiring strategies, highlighting a key focus on talent strategy and workforce management, crucial for securing large multi-year contracts across domains. TCS's order book stood at $8.1 billion. Also, book-to-bill ratio for each company based on the latest quarter are: TCS reported a ratio of 1:1, and HCL Technologies also reported a ratio of 1:1. So we notice that even in a period of subdued revenue growth, order bookings, even when they are not spectacular, remained robust. Now let's discuss about the emerging technologies and innovation. While the key growth drivers in the recent years were digital transformation projects, cloud projects, and general business transformation, their focus seems to have shifted towards generative AI, particularly in the last 2 years. The large global clients of Indian IT companies have firmly embraced emerging technologies, particularly generative AI, as catalysts for growth and differentiation. TCS appears to be at the forefront of investing in research, innovation, and intellectual property development with a specific emphasis on emerging trends like generative AI. They highlight various projects and initiatives leveraging AI across industries and aim to strengthen their capacities in areas like operating model transformation and digitalization. Infosys has made generative AI a key focus area, training 100,000 employees on these capacities. Their Topaz platform has been integrated with generative AI components to create solutions across industries like banking, retail, and food. Use cases span areas such as analytics, process optimization, personalization, and software development. WIPRO is committed to integrating AI across various sectors, from digital workplace services to healthcare. They emphasize responsible and sustainable AI development, fostering innovation and collaboration both internally and with clients. Strategic partnerships with industry leaders like NVIDIA and IBM enable their AI driven strategies and solutions. HCL Technologies have positioned itself as a frontrunner in the generative AI domain with over 30 wins in generative AI related projects. They are well poised to capitalize on the surging demand for these cutting edge solutions and associated services like data modernization, cloud migration, and security enhancements. Tech Mahindra has made progress in AI and Gen AI initiatives, launching solutions like Vision Amplifier. They have active client conversations related to Gen AI with early stage experiments and POCs moving into production pilots, particularly in areas like conversational AI and document AI. Beyond AI and generative AI, these companies also offer comprehensive solutions across cloud, cybersecurity, engineering, digital transformation, and data analytics domains to cater to diverse industry needs. In cloud and infrastructure services, TCS, Infosys, WIPRO, and Tech Mahindra have heavily invested in capabilities for cloud migration, modernization, and management across public, private, and hybrid environments, while HCL Technologies prioritizes cloud services, leveraging products like HCL Sophie for cloud native modernization. Regarding cybersecurity, TCS and WIPRO offer comprehensive security services, while Infosys strengthens capabilities through acquisitions and partnerships. HCL's engineering R&D services, bolstered by acquisitions like ASAP, contribute significantly alongside TCS and Tech Mahindra, which also excel in engineering and product development, especially in automotive and aerospace sectors. Customer experience and digital transformation are key areas for TCS, Infosys, and WIPRO, while Tech Mahindra focuses on product design and supply chain resilience for manufacturing. Data analytics solutions leveraging AI, machine learning, and big data technologies are developed by Infosys, TCS, and WIPRO, whereas HCL invests in industry specific data modernization. Now, let's discuss about operational excellence and cost management. These companies have exhibited their dedication to operational excellence and cost management, driving efficiencies that have improved profitability and sustained competitive advantage. HCL Technologies demonstrated remarkable operational excellence with its return on investment capital (ROIC) reaching 32.8% at the company level and an impressive 40.1% for the services segment. This highlights HCL's disciplined capital allocation strategy and focus on maximizing returns for stakeholders. On the other hand, Infosys maintained its focus on operational aspects, stating no major concerns on resourcing despite moderating headcount growth. The company continues to optimize levers such as utilization and pyramid structures. Also, WIPRO's impressive margin expansion to 16% with a sequential improvement of 1.8% was attributed to its consistent investment in people, processes, and organizational efficiencies over several quarters. TCS reported strong cash conversion at 102% with net cash from operation at Rs 112.76 billion and free cash flows at Rs 103.52 billion, reflecting its operational excellence. Tech Mahindra initiated focused programs to increase operational efficiencies such as pyramid optimization, utilization improvement, subcontractor reduction, and value based pricing. These programs aimed to weed out inefficiencies, ensure customer delight through delivery excellence, and improve operating margins. While the company showcased various strategies for operational excellence and cost management, HCL Technologies and TCS stood out with their exceptional matrices such as ROIC and cash conversion, respectively. Infosys, WIPRO, and Tech Mahindra emphasized their efforts in optimizing resources, improving utilization, and driving efficiencies to enhance profitability. Now let's discuss about the talent strategy and workforce management. Recognizing the critical role of human capital in driving sustainable growth, these companies have implemented robust talent strategies and workforce management initiatives. The Indian IT industry has shown resilience and adaptability in the face of economic challenges, with the latest NATSCOM report indicating a growth of 18.5% in FY24. This growth is driven by demand for digital transformation, cloud, and AI services. The industry is also focusing on upskilling and reskilling its workforce to meet the demands of emerging technologies such as AI, cloud, and automation. Companies like Tech Mahindra are investing in AI capabilities, aiming to train 100% of its IT talent in AI capabilities by FY25, having already trained 16,000 associates in pair programming. Despite subdued revenue growth, order bookings remain strong, with companies like HCL Technologies and Infosys showing their deal-making prowess. TCS emphasized organic talent development, fresher hiring from campuses, and recalibrating lateral hiring strategies. The company boasts an impressive workforce of 603,305 professionals with a keen focus on organic talent development through campus hiring and strategic recalibration of lateral hiring efforts. Infosys did not express any major concern regarding resourcing, while WIPRO underscored the importance of its people and processes as crucial enablers of its impressive margin expansion. Now let's discuss about the vertical and geographical diversification. These companies have strategically diversified their revenue stream across various verticals and geographical regions, mitigating risk and capitalizing on emerging opportunities. HCL Technologies Engineering R&D ER&D services segment, strengthened by the ASAP acquisition, emerged as a growth catalyst, registering an impressive 8.7% sequential increase. Infosys exhibited resilience in verticals such as manufacturing, energy, and life sciences, while TCS witnessed robust growth in sectors like manufacturing plus 7% and energy, resources, and utilities plus 11.8%. Across the five IT services companies, TCS, Infosys, WIPRO, and Tech Mahindra display extensive vertical diversification, spanning industries such as BFSI, manufacturing, retail, healthcare, communications, energy, and utilities, among others. Meanwhile, HCL Technologies exhibits a stronger emphasis on specialized verticals like engineering R&D services, bolstered by its software products business. Geographically, all companies maintain a global delivery footprint with significant revenues from key markets like North America, Europe, and Asia Pacific. TCS and Infosys show notable strength in emerging markets like India, while HCL, WIPRO, and Tech Mahindra focus on expanding operations in regions such as Asia Pacific, Middle East, and Africa. WIPRO and Tech Mahindra have emphasized strategic initiatives to broaden their geographic presence and pursue higher value business in specific regions. Overall, while TCS, Infosys, and WIPRO demonstrate a balanced trade across verticals and geographies, HCL Technologies' specialization in ER&D and Tech Mahindra's recalibrated strategies signify unique focuses within the industry landscape. Now let's discuss about the strategic priorities and value creation. These companies have implemented strategic initiatives aimed at driving long-term value creation for their stakeholders. TCS seems to be focused on investing in research, innovation, and building intellectual property with a keen emphasis on emerging technologies like generative AI. They aim to drive value creation through operating model transformations, digitization, customer or employee experience, sustainability, cloud, and AI or Gen AI adoption across industries. Whereas Infosys is prioritizing cost optimization, efficiency programs, and generative AI solutions to cater to the evolving demand landscape. WIPRO is concentrating on margin expansion and efficiency gains through consistent investment in people, processes, and organizational efficiencies. They are also prioritizing strategic partnerships such as with NVIDIA and IBM to bolster their AI driven strategies and solutions while fostering responsible and sustainable AI development and HCL Technologies' strategic priorities, including leveraging inorganic opportunities like acquisitions, example ASAP, to expand into niche domains and strengthen capabilities. They are also focused on transitioning towards a more sustainable recurring revenue model through their software product business and driving operational excellence through disciplined capital allocation. Tech Mahindra is embarking on a turnaround phase with strategic priorities centered around revenue and sales improvement, margin expansion, and organizational transformation. They are recalibrating their focus on top accounts, centralizing delivery, fostering innovation, and building a culture of performance, professionalism, and merit based rewards. While all companies are investing in emerging technologies like AI and cloud, their specific value creation approaches vary. TCS, Infosys, and WIPRO seem to be leveraging AI or Gen AI and partnerships to drive digital transformations and operational efficiencies for clients. HCL is focused on niche verticals and a recurring revenue model, while Tech Mahindra is undergoing a broader organizational restructuring to unlock long-term value. Now let's discuss about the recurring revenue model and capital allocation. In a bid to enhance financial stability and shareholder value, these companies have embraced recurring revenue models and implemented judicious capital allocation strategies. While forward guidance varies based on their current positioning and market conditions, all five companies recognize the importance of recurring revenue streams either through productized offerings, consulting services, or long term client engagements. Capital allocation strategies are also focused on driving sustainable growth and profitability. TCS has been focused on building intellectual property and products like Ignio, TCS Banks, and Quartz blockchain platform, which contribute to recurring revenue streams. The company has rewarded its shareholders with a generous interim dividend of Rs 27 per share, including a special dividend component, further reinforcing its focus on shareholder value creation. Infosys has not explicitly discussed recurring revenue models, but their focus on cost optimization and efficiency programs could potentially lead to recurring engagements with clients. WIPRO's consulting business, including acquisitions like Capco, has been a key driver of order bookings and resilience, potentially contributing to recurring revenue streams. HCL Technologies have been strategically shifting towards a more sustainable recurring revenue model through their software products business, as evidenced by their growing annual recurring revenue ARR of $1.06 billion, reflecting a 2.9% year over year growth in constant currency terms. Also, Tech Mahindra has not explicitly discussed recurring revenue models but has emphasized disciplined capital allocation and a focus on maximizing long-term earnings growth and profitability. Now let's discuss about the forward guidance and future outlook. While acknowledging the prevailing uncertainties in the global economic landscape, these companies have provided guidance and expressed cautious optimism regarding their medium to long-term growth prospects. TCS has provided a relatively positive outlook driven by demand drivers such as operating model transformations, digitization, customer or employee experience transformation, sustainability, cloud, and AI or Gen AI adoption across industries. Infosys has tightened its FY24 revenue growth guidance to 1.5 to 2% in constant currency but maintained its operating margin guidance at 20 to 22%. Their near-term visibility is constrained as clients finalize budgets, but they remain optimistic about medium-term growth prospects backed by recent large deal wins and levers like cost programs, consolidation, and generative AI adoption. WIPRO has provided cautious guidance for the next quarter, anticipating either a slight decline or modest growth in constant currency terms. However, they remain optimistic about potential market opportunities and their strategic initiatives to deliver value-added services. HCL Technologies has acknowledged the prevailing uncertain demand environment but remains cautiously optimistic about its medium-term growth prospects backed by its balanced portfolio, exceptional talent pool, and industry-leading positioning in emerging technologies like generative AI. Tech Mahindra is embarking on a turnaround phase and plans to share a detailed strategic plan in April, outlining the long-term vision and initiatives to maximize revenue growth and margins through substantial changes, investments, and a focus on target markets. Summary and key trends. Number 1. Resilient financial performance. All 5 companies demonstrated resilience in their financial performance, reporting healthy profitability and operating margins despite challenging macroeconomic conditions. Focus on emerging technologies. There is a common emphasis on embracing emerging technologies, particularly generative AI, across these companies. They are investing in research, training employees, and integrating AI capabilities into their platforms and solutions. Number 3. Pursuit of operational efficiencies. Cost optimization, efficiency programs, utilization improvements, and talent management strategies are common themes reflecting a shared focus on operational excellence and cost management. The companies demonstrated a strong focus on driving operational efficiencies and margin expansion through various initiatives. TCS improved its operating margins to 25% with a sequential expansion of 75 basis points. Infosys maintained operating margins at around 20 to 21% levels, with Q3 operating margins at 20.5%. WIPRO achieved impressive margin expansion, reaching an operating margin of 16%, an improvement of 1.8% sequentially, attributed to consistent investment in people, processes, and organizational efficiencies. HCL Technologies exhibited remarkable operational excellence with operating margins at 19.8%, reflecting an improvement of 126 basis points sequentially and 16 basis points year over year. Their return on invested capital ROIC reached an impressive 32.8% at the company level and 40.1% for the services segment. Tech Mahindra reported an EBIT margin of 5.4%, an expansion of 70 basis points quarter on quarter, with an adjusted margin of 7% after exceptional items. They initiated focus programs like pyramid optimization, utilization improvement, subcontractor reduction, and value-based pricing to drive operational efficiencies. Overall, these companies leveraged various levers, including optimizing workforce pyramids, improving utilization rates, rationalizing subcontractor expenses, and implementing value-based pricing models to enhance their operational efficiencies and profitability. Number 4. Geographical diversification. These companies have diversified their geographical presence with a strong foothold in India and strategic expansion into other regions like North America, Europe, APMEA, Asia Pacific, Middle East, and Africa. Number 5. Deal momentum. Strong deal bookings, large deal wins, and double-digit growth in new orders highlights the robust demand for their services and solutions across various sectors. Number 6. Shareholder value creation. Initiatives like dividend payouts, share buybacks, and efforts to improve return on equity (ROE) and return on invested capital (ROIC) demonstrate a commitment to enhancing shareholder value. Now let's discuss about differentiation between various companies. Number 1. Revenue growth rates. While all companies reported growth, the rates varied significantly. HCL Technologies witnessed the highest sequential revenue growth, 6% QOQ, while Infosys faced modest declines in revenue. Number 2. Profitability levels. The company's operating margins and net profit margins varied, with TCS leading at 25% operating margin, followed by Infosys 20.5%, HCL Technologies 19.8%, and WIPRO 16%. Number 3, acquisition strategies. Some companies like HCL Technologies, ASAP acquisition, have pursued inorganic growth through strategic acquisition. For most part of the Indian companies have focused more on organic growth. This is even though most companies are sitting on very large amounts of cash. Number 4, vertical strengths. The companies have diverse vertical strengths, with HCL Technologies excelling in ER&D services, Infosys demonstrating competence in manufacturing and life sciences, and TCS leading in sectors like energy and resources. Number 5, geographical mix. While all companies have a global footprint, their geographical revenue mix varies. For instance, TCS saw robust growth in India but faced challenges in North America, while WIPRO focused on the APMEA region. Number 6, guidance and outlook. The companies provided varying guidance and outlooks for the future, with Infosys tightening its revenue growth guidance, WIPRO adopting a cautious stance, and others expressing optimism about medium-term growth prospects. If you enjoyed this video, don't forget to hit the like button and subscribe for more such informative contents. Thanks for watching, and we will see you in the next video.